for joining us for another edition of the Optimize Weekly Market Recap. My name's David Ferreira, Portfolio Manager here at Optimize. And for today's recap, we'll be looking at last week's excitement in the markets, as well as what we're watching for the week ahead. It was a busy week in the markets with major indices pulling back slightly after several strong months for North American equity markets. The TSX and the Dow both finished the week down a little over 1%. The S&P finished the week down around 2.2%, while the Nasdaq was the weakest performing index, down around 2.8% for the week. Looking at sector performance, the weakest performing sectors were utilities and technology, while energy and consumer discretionary outperformed the broader markets. Taking a look at the events from this past week, Fitch, a credit rating agency, lowered the U.S.'s credit rating from AAA to AA+. The downgrade was attributed to a predicted increase in debt over the coming years, and industry leaders from Goldman Sachs and JP Morgan commented that they don't see this as having any major impact on bond pricing, as really the market is dictating bond prices as opposed to the rating agencies. Canadian jobs data came in on Friday, showing our economy shed about 6,000 jobs in July, pointing to looser labor market conditions going forward. This decrease in employment stemmed exclusively from a decline in part-time jobs, whereas employment in full-time positions was up for the month. This data print has lowered consensus expectations for a September rate hike from the Bank of Canada, supporting Canadian equity markets. And staying on the topic of job data, the U.S. economy added 187,000 new jobs in July. This represented the slowest pace of hiring in over 2 years, suggesting that Federal Reserve policy is having its intended effect, and this data will play a role in future interest rate policy decisions as the Fed continues to assess labor market tightness. Looking at the week ahead here, on Thursday, Consumer Price Index report scheduled to be released will show whether the recent moderation in inflation extended into July. The most recent CPI report for June showed that annual inflation decreased to 3%, the lowest level since March in 2021. A few Fed officials are also on schedule to give speeches throughout the week, which should provide additional insight on Fed interest rate policy, particularly as a follow-up to last week's job data. And lastly, second quarter earnings are coming to a close, with a few names still to report this week, including Sun Life, Uber, and Sony. Overall, an exciting week in the markets last week and a short but eventful trading week ahead of us here. Until next time, thank you for watching and see you soon.